Good morning, y'all. Hi, Michael.
Ah, oh, we got two Michaels here.
Yeah, just you and I.
Hi, Michael. Hi, Michael.
What was that class we did where we had like five Michaels?
Oh, that was at
That was
the title company or whatever.
Yeah.
I'll
All
close
right,
this.
so let's get started here. You guys have
Another Zoom
questions?
meeting.
Well, where's the chat? I gotta find the chat. Sorry. Yeah, I got the chat up. So if you guys got any questions, either pop on the chat or speak up. You don't have to hold them to the end. We know how we usually roll with these. So, but let's go over. So, mastering the VA loan program. I might be a little biased on this. I still think it's the best loan program out there, but definitely biased on my aspect of it. And since I'm recording this, just who I am, Stephen Brock with Family Mortgage. I did 9 years in the Army. Was an Army recruiter my last couple of years in it with the local community, and then I built my business in the mortgage world 100% on referrals, and just finding the right loans for the right kind of people out there. This is my wonderful team that helps everything run so smoothly. Without them, I probably wouldn't sleep at all, but we got. All right, so what we're going to go over today. What is a VA loan, the eligibility of it, VA guide, some of the loan guidelines, the process, and then things to keep in mind with veterans, and then marketing to veterans and kind of looking through it. Most veterans like to work with another veteran, if it's the realtor or the lender. They want sometimes one of those people to be it. So worst case scenario, you got me to do it. So what is a VA loan? So it's for our veterans, active duty. Some of this is going to be broken down to a low level of intelligence, though none of you guys are that. But what the government backs these loans, and then the VA guarantee funding fee is what that kind of comes into, and the eligibility. I really wanted to kind of go over this because a lot of sellers will walk away, or I don't want to say walk away, will not consider a VA offer because they're not putting any money down. And if you actually look at it, when we go over it, they might not be putting skin in the game, but the government's backing it by 25%. So it's actually one of the best loans out there with there. So kind of an example of a VA loan, we can find anything for 300 in our area, that'd be amazing, but 0 down payment. They have a funding fee on there depending on the vet status, and then it'll be rolled into the financing of the loan. So technically the veteran will have a little bit more loan to value, a little over 100% when they add into that funding fee with it. But the biggest thing, no down payment required at all on it. They can if they want to, but they do not have to.
Wait, the 300,000 is the max for the
No,
zero.
that's just an example.
What's the max for the 0 down? There is none.
Nothing. There isn't anymore. We'll get there. Michael, stop asking questions that are in the slideshow.
You literally tried to ask questions.
Getting ahead of the game.
He is. All right, so VA, the funding fee is just basically the mortgage insurance on there. Now the biggest thing is, so they will have the funding fee if they're using it multiple times. It'll change how much percentages, but the biggest thing is disabled vets, they're automatically exempt from it. Even if they just have 10%, they're exempt. Anybody that I talk to about this with it is if they have served at all, especially in the wartime era, is when you start the process of your VA loan, if they don't have disability, I try to talk to them to go talk to somebody about getting it, because when you file for disability in the VA, when you start the filing date, not when it's approved, but when you start the filing date is your eligibility. So example on mine is when I purchased my house, I started my process February 1st, and then I bought my home February 26th is when it closed. When I finally got approved for my disability in like September of that year, they went back to February 1st, so they refunded my funding fee. And I thought I was going to be a pain to try to get it. That was actually the first thing that came. I actually didn't even get a letter saying my disability was approved. I just suddenly had the funding fee sitting in my checking account. That's how quickly they will give it back once they do get the disability approved. So anybody that I know that doesn't have it, I always try to at least get them to start the process somehow, and hopefully they can get it so they can get that money back.
Stephen,
Yes.
right? Is this considered a wartime, or will it change now that we're dropping bombs on Syria and things like that? Will it make an adjustment for current military members?
So we are still in the global war on terrorism. I don't think we've ever officially.
We didn't go out of it.
Yeah, I don't think we have officially ever closed that out since
Okay,
like
just
2001.
curious as
2002.
to,
They make it a little more stricter on who's considered more of a wartime veteran with it. But I mean, you technically don't have to have a disability just because you went to war. I mean, anything that you caused during service could happen with it.
gotcha. Thank you.
You're welcome. VA funding chart. The ones that are highlighted will be down to 0 if they have disability at all. It'll go away. The VA IRL and then loan consumption will always be 0.5%, no matter what. If they have a disability or not, they're still going to charge them 0.5% on it. But as you can see, it significantly rises when they use it again. If they're doing less than 5% down, but then it does go 5% or less, 5% to 10% to 10% and more, depending on the time they use it. Certificate of eligibility. So if I say most people that are post 9/11 or that were in at least the reserves or the federal, actually in the regular Army, not in National Guard, their certificate of eligibility is really easy to get. I just log on to the VA website. So can they, the veteran themselves. Takes 2 seconds to get the information back. Now, the situation that happens is sometimes you get people from the 70s, 80s, or a National Guard that were even in the 90s and early 2000s, is sometimes you have to track down their time card from the reserves or National Guard, and you're trying to find the state and the unit that you did, 5-6 years as National Guard from the 80s, and you're trying to get all that paperwork, if you don't have it yourself. That's where it can kind of get difficult. So I can put all their information in and it'll come back right away and say, hey, here, they're eligible, here it is, or hey, this is what we need to make sure they are eligible. Like, we know they were in, but we don't have the time card is not in their records, and their records, the VA records. So they're looking at it from the state. Just like any other government entities, they don't always commingle very well with each other, especially way back in the day. So this is what's going to be able to have their paperwork and help establish that.
Hey, Stephen, can you go back to the last slide?
Which one?
The one about, can you?
Funding fee?
So you're saying that you have a down payment column there, but they don't have to have a down payment, is that right?
They don't. So the funding fee, like right here, the 2.15% for the first time they use it, if they have a down payment of less than 5%, that's the funding fee. So if it's 0 to 5%. Go ahead, Michael.
Question then. So what defines a first time usage? Like, are you saying just for the first time ever? Or, because I know if they have a second VA loan out, obviously it's at the higher rate, but what if their first VA loan they took out is completely paid off? Are they back to a first time, quote unquote?
No. Once you use it one time, then you're in the sub.
Okay, so you're always going to be at that 3.3% then if it's their second time using it. Thank you.
Now, it's not a first time home buyer. So if they've used conventional or something else before, there still would be the first time they've used the VA loan itself. Go ahead, Michael.
So they would make a purchase and they would be charged 3.3% funding of the loan, and that's tied into the loan. So they're actually getting 103% of the monies
Correct.
to make the purchase. Is that correct?
Correct. Yeah, it's going to be added onto the loan amount.
Okay, thank you.
So I've got just a question, if you even go, hate to have us going backwards on this, but you were talking about an active vet earlier.
Mm-hmm.
What constitutes that? And I'm sorry, my mind is going to Liam, Nancy's son, who's in the Marines. Would he be eligible for something like this?
If he has, so I believe right now it's still it depends on the time period that they served, that how many days they had to be on active duty status. Will count. Of course, 1 day deployed is an automatic. You're a veteran. Rule of thumb is 2 years. 2 years of active service, then you become a veteran. Unless, of course, between the day 1 and the 2-year mark, you get injured and get disability, automatically a veteran. But like just because you went to training, you served a year or so, then it doesn't count until you hit that. Usually that's a 2-year mark.
Right, but being deployed
Yeah,
circumvents that.
yeah.
Okay.
Being deployed, you're automatically one
Okay.
day in combat zone, you're automatically a veteran.
Thank you.
The biggest thing here, I think it was a couple of years ago, 2021, I think is when they did it. So the eligibility will cover up the 726, just the conventional loan amount. It's actually about 750 now. They're kind of working that way, but there is no actual max if the veteran has a full entitlement. So if they want to go purchase, I just did one very recently. It was a $900,000 home. 0% down on it. There is no actual max for it anymore. It actually goes up to almost like 5 million if they can actually qualify for that. But after that, it's just a very small down payment if they need anything. With the certificate of eligibility, simultaneous VA loans, you can have 2 VA loans at the same time. Most people don't realize that. You can do it. You can do it even if your eligibility is not there anymore. You can still actually put down payment on the next one to do it. Now, with this, it means you're buying your next house as a primary. So if you are moving from up north down here, have a VA loan up north to down here, then you're going to rent out the house up north. You can still use the VA loan here if you have eligibility. The problem that comes to most people is the 0 down when you have 2 becomes very slim on using it, mostly down in South Florida because of the price of the homes. Usually when you buy anything here, you're using all the eligibility right away. So you might have to actually come out of pocket for the next one. Now, if you are doing a simultaneous closing, you're closing on the old one to pay off the old VA loan and start the new one. I usually tell people put a day in between because you're waiting on the VA to give approval to send it to close the next one, but you can literally close that morning on the old house and purchase a new one that afternoon on the new one with a VA loan, and your eligibility would technically have been restored in between. But we're dealing with government, don't delay the process. So I always say give them a day or so in between if you can, just to make sure it goes through smoothly. What most people don't realize, they always think VA loans are just 30-year fixed loans. They actually have 15 years and an ARM, depending on what they want to do. The biggest thing is no monthly mortgage insurance. That's what that funding fee is for. If they have to have it, there's no down payment penalty, or no prepayment penalty, no down payment required. And then the only bad part is there's a 4% late fee if they pay after the 15th, but actually most loans are 5 to 6%. So it's actually a little less than most, but just pay your bill on time. Again, maximum loan amounts is the biggest thing because this is still coming up and it's been almost 3 years since they have changed this. There's no maximum loan amount for anybody. Putting you under the bus, Michael Douglas, as you asked.
So
Go ahead.
I thought you just said that they had a maximum amount they could borrow unless they're fully entitled.
Yeah, if you're fully entitled. So fully entitled means you're going to have your certificate of eligibility. Now, if you start having multiple homes on your eligibility, that's when the entitlement's going to go down on the max. But if hey, I only have this one house that I'm purchasing now, there is no max loan amount.
Gotcha.
Yeah, it gets a little tricky when you start having multiple VA loans at the one time. because then you're trying to redo the calculations of the eligibility and making sure that how much they can put on the next one. If they have to put any kind of, just because they don't have full eligibility on the next one, they can come with down payment to cover the cost of it to make it that way. So it's still, it might be, hey, you have to come with 2% down or 4 or 5 or whatever the number is to still get the VA loan with it. People will do that just because of the interest rate is usually lower on a VA loan than a conventional putting the same amount of money down, of course, of an FHA.
So what happens to people like my customer, the McBrides,
Mhm.
when they used the Hometown Heroes? So they really didn't use that eligibility then, correct?
They technically didn't. The eligibility is basically like the insurance policy on the loan for the lender, that the government's saying, hey, we're going to pay up to 25% of the purchase to cover if there was a foreclosure. That's what the eligibility is really for with it.
Gotcha.
Not their money out of pocket. It's just that insurance kind of cost with it.
Gotcha. Okay.
Makes sense?
So they sort of, yes.
Yeah, so they did use they used a good portion of their eligibility, if I remember. They probably still have some. Like if they were moving out of state or somewhere far enough away, even within Florida, they could probably keep both of them.
Gotcha. Okay.
Of course, having foreclosures, short sales are going to start taking away from that entitlement. Usually they have to wait so long for it. Like I said, the biggest thing, they can have 2 VA loans at one time. You can actually have up to, I've seen 4 VA loans at the same time.
Okay, I'm confused here. Sorry, I was not paying attention in class. The guy goes to you, the veteran goes to you, he or she, and they want to buy a $500,000 house.
Mm-hmm.
So this line entitlement is 25% of how much veteran can borrow. So you run their credit check and they got great credit and they can buy this $500,000 house. Where does this entitlement come into the 500,000?
So that's when the government,
100,000.
the government's going to come back and say, we're entitled or insuring 25% of that. So if they can qualify for the $500,000 house, the government's coming and saying to the lender that if this gets foreclosed on, you're getting your money back because we're going to, whatever you sell it for to get out of that mortgage as the lender, let's say you sold it for 400. Well, the government's coming in and saying we're paying 25% of the 500, so we're going to pay you the rest of that 100 up there. They're not going to give them more, but they're going to insure the rest of the property. So instead of having a big down payment, it's like the government basically coming in and saying, hey, I'm putting 25% down as on this loan is what's happening.
Right, so they're only then giving you 75, the lenders.
Yeah, the lender's just worried
Even
about
though he's
selling
given
that house at
100%.
75% of what it was on the loan.
Right, even though the lender's given 100%, he's guaranteed to get back 25%, is that right?
Correct.
Okay. Which would, in a non-military person, it would be like paying PMI insurance.
But on
Yes.
steroids, because the PMI doesn't cover as much.
Yeah, right.
But yeah, similar.
Mhm.
Just to award a certificate of eligibility, this is the biggest thing we look up for, is up in the top right-hand corner of the funding fee, making sure that they're exempt or not exempt with it. And then if they had any loan numbers, of course, it's going to be on here. If they have been already completed or paid off or whatever the case is, because they sold it, it will disappear on the prior loans charge because it's only what's actually on their entitlement with there. But basically, we're just looking at if there is any entitlement, what the entitlement is, and then we're going to back, if they already have hits on it from another VA loan, then we just got to do another calculation to see how much they can use of the eligibility for the next purchase. So eligible properties for VA loans, of course, single families up to 4 units. The only downside of using a VA loan, if you're buying like a duplex, a triplex, or a quadplex, is we can only count the rental property of the other units if they have a history of being a landlord. So if they do not have a history of it, they have to be able to cover the mortgage entirely. So that is a downside of the VA loan with it, where a conventional or FHA, you can start using the other side while doing the pre-approval process and seeing where they're at. You can't do that on a VA loan. They have to have some kind of history of it. And it's basically, if they do have a history of it, you know, if it's, the only problem too is if it's too far back, like let's just say now, I had somebody recently over the summer, is they rented out a house that they own in 2018, but they haven't rented out since then. We sent up the VA to see if they would approve it, and they said no, too far away, wasn't recent enough for them to accept it, so he had to technically qualify for just what he made. He did, but it could have been a situation where if we, and this is, we always usually kind of put this up front, if this is what people are looking to do it right away, because if not, it can throw, I've seen lenders out there do it as like an FHA and then not realize that if they don't have that landlord experience, it's going to blow up towards the end of it. Condos must be a VA approved condo list. You can add condos onto this list during the process, just same as an FHA spot approval can happen. Probably in the next year or so, when for Florida, when they change all the laws with everything, officially comes in, a lot more of the condos will be able to be VA approved. I've seen condos though stop people from using VA or FHA because they'll say, hey, you have to have a minimum of 10% down. You know, I've seen them up to 25% down minimum, where it's on the condos rules for it. You know, there's not much we can do on that end. PUDs, just HOA communities, modular homes can be, it's a little bit tighter, but same thing as if you have ever done one with an FHA, it can be used. Just has to be, can't be the single wide, it's got to be a double at least, has to be the property they're going to own, and has to be what's called tied down or on a foundation, depending on how they actually put that manufactured home on that land. Mixed use properties, we see this kind of in Avocoa area, where there's commercial at the bottom of the property. As long as it's less than 25% of the square feet, it can be used as a with a VA loan, because it's still considered residential. And then leaseholds, all depending on the VA, they will approve it if there's a leasehold on the property or not. Biggest things for ineligible properties is co-ops, condo hotels, and then group homes. It's been not as popular anymore, but group homes were a big one down here that, you know, in South Florida, that we were looking at a lot more, where the VA would actually start Googling addresses to see if it was a group home and see if the person's kind of buying it as a group home, or they're actually going to buy, because they were just regular residential homes, and they were actually going to buy it as a residential home and live there and not use it as a group home. Kind of can be iffy with that, but you're not seeing that as much lately. It's been a while. All right, repairs. So the repairs that come up, we don't look at the inspection report except the WDO. So make sure you're ordering the WDO on that. But the biggest thing is the health and safety issues that are mentioned on the appraisal. So biggest things that I see is wood rot and broken windows. So broken windows, a crack in it, it doesn't open up properly. We have those old awning windows where people have screwed them in shut. That can't happen. So they're going to have to fix them where they can't open and operate correctly. Stuff that can happen after closing course, exterior only with it, because the home has to be habitable the day of closing for the veteran. But things that can have, we can do new roofs that need to be done, where the seller is going to pay and put it into escrow. These are all things that can actually be done as long as it's done within the 90 to 120 days. But the biggest thing for health and safety, if it's on that appraisal, it has to be fixed. Now, think it's on the next one because I'm gonna get ahead of myself. There's the next-
Appraisal or on inspections?
We don't look at the inspections at WDO. So if it's on the WDO of wood rot, termite damage, whatever the case is, we see that. We have to have that clear. But if
Okay.
it's not on there, of course, if that's clear, then we're good. Safety issues, the appraiser is going to bring up. So that's going to be on their inspection report, but we don't look at it from the inspection report side. We look at it when the appraiser goes out there. So if it comes up on inspection and you have it fixed before the appraiser goes out there, then it's fine, because then, but you'll, at least know what has to be done. I've seen one where it's just a small crack, maybe 2 inches in a window. It had to be replaced completely.
Okay, so just don't, so your recommendation then potentially would be like, I have a listing now where there's a hole in the window. We're going with the fact that it, was a rock.
Yeah.
Not a bullet, but like 22 to me, but but just don't even put VA as a possibility then.
Unless the
If he's
seller's
not
gonna fix
willing
it.
to replace the window.
Correct.
Okay.
Yeah, because it's gonna come up. Now, you could put it that you could still do it to the VA and just say, hey, this is gonna have to be fixed, and maybe the seller doesn't want to do it, but you have a quote for it, and the borrower, the veteran, is gonna pay to have it fixed before closing. That's fine.
Okay. Yeah, but I think this house has other reasons I should leave VA off.
Yeah,
so.
yeah, that's there's others, and don't worry.
Well, just, it's got wood up on the roof, like siding.
Mhm.
And when the pre-inspection was there, they noted in pictures that you could see where it was wet, like from the attic.
Gotcha.
So I'm guessing then I would just don't even put VA, because then all of that wood would have to be replaced,
Yep.
correct?
I
Yeah,
don't know if you can even do an FHA on that house.
nope.
Right.
This house has so many issues right now.
Cash.
You could do it.
I know, but nobody's coming up with cash right now, although it is a good house, but
What
Yeah.
about a 203K, Kelly?
that would do it. You could do that, because the things are simple fix it, I mean, not that it's cheap, but they would be simple fixes. Just fix the wood, fix the window.
It would get you to a close in a
Not
30,
global
60,
offer.
90-day repair, so they could get a clean 4-point, right?
Mhm.
Yeah.
Yeah.
So, yeah.
Yeah, that's an option. All right, so occupancy, of course, is owner occupied only. If the veteran is deployed, the spouse counts as somebody moving in, it has to be within 60 days. So bar for qualifications, credit, debt ratios, residual income, BAH and BAS, which is basic allowance for housing and basic allowance for supply. If they have that, that's if they're still in the military, that's where those are going to come up. So credit requirements, there is no minimum credit score set by the VA. It is lender specific, whatever the lender wants to actually lend on. You can go, most of the times people are doing it like 580 is usually where a lot of lenders will start cutting it off. I've seen lenders cut it off at 640. I always say that if we can get them at least to 600, it's usually pretty easy to jump somebody up to that. Because then the fees that go on to something that's lower than a 600 is very high with it. No bankruptcies and foreclosures in the last 2 years. No delinquent federal debt. This is a big one, especially with Reserve and National Guard, is they overpay their troops all the time, and then suddenly they take back that pay and they don't even tell them, and it's just a collection that's suddenly on there like, hey, you have a collection to the government for $200. It comes on their credit report. The only way to have that taken off is to pay it in full and then dispute it, because they will not do anything. VA, the government won't do anything about it until it's paid in full, and then they'll tell you to dispute it because they won't answer the dispute if it's paid in full. That's the only way to get rid of it. Because I've had them try to write a letter for it, and it, once they paid it, that they didn't even come back and say it was paid off. They just basically had to wait 30 days for it to update on the credit report itself whenever it was going to report. So it can be a real pain. And so it's something to look at that the lender has to make sure of before the pre-approval goes on, because if we have something coming up and they go under contract very quickly, they can throw a wrench into it. It goes to manual underwriting, which will drop the debt to income ratios significantly. Judgments, it has to of course be paid off, or there's a 12-month plan for it, and then we got to count the payments and their debt to income.
What about delays, like delayed student loans or some federal student loans?
Yep, you can. They can
the same.
right here, student loans. If it's over the 12 months with it, then we can exclude it. Installment loans less than 10 months, we can exclude it. 401k loans on any loan that we're doing, we can exclude it, because basically you're paying yourself back on your own debt, so that's why it's not a liability. We can exclude some debts that are assigned to the spouse as long as we see it that's on the divorce decree. That can be a little harder for regular loans, but VA will push it away. And then any debts that are they're co-signed on, as long as we can show that 12 months, consecutive months have been paid from the other person's account and not the veteran's account, then we can exclude those. However, so the biggest thing is debt ratios can be a lot higher on than normal. Conventional with great credit and a decent down payment, you're pushing 49% on the back end of the debt to income ratio. On FHA, you're pushing about 56, 57. On VA, I've closed them at 62 before. Usually we get a lot of acceptance between the high 50s and low 60s with it still. And that's because we're going off of, which I think every loan should go off of this, is residual income. Is the amount of income that's left over for family support after everything else is paid. So how much money do they have? Now, if they have children, we're putting in their daycare expenses. So it'll depend on how many people are in their household that they're taking care of, spouse, any number of the children will be on there, will determine the calculation of their residual income. With the residual income, if it is too low, technically, then we might need more money down to offset it, or have them pay off debts to offset it there. But this is actually why VA is so great. It actually goes past the point of just, hey, here's your debt to income ratio of what you make, what's on your credit report. It actually makes sure that they're not going to be just house poor, that they can actually have a living in that home. That's what they're looking for. That makes sense? So job history, almost like any other loan that's out there, requiring the 2 years with it. If they are recently discharged, it's 12 months in some areas that we can use their just commission on, just depending on what they're doing. The biggest thing is if they're switching jobs, either getting out or they're just between job changes, the VA requires at least one pay stub and showing 30 days of work history at the new job. So if they're moving down from out of state down here, they need to be on the job already before they can close. Future income isn't allowed. So most play like a conventional loan, as long as they're going to start work within 60 days of closing, we can count what the future job income is going to be. With a VA, they have to be at that job. So that is a big thing. A lot of people kind of, we saw that a lot in 21, 22, where people were just not looking at that because they were so used to people coming down here. They didn't realize that the veteran actually had to be at work if they're going to use the VA loan. And then most employers, I've seen employers will actually help them out with that situation, either make them remote for the first month, and then once they're here, they start working, which is fine. So VA loan process, prior to contract, making an offer, under contract, and closing. Prior contract is the pre-approval kind of things we've already been talking about. The certificate of eligibility, checking the residual income. If they're active, we guys have the orders and the base that they're at. Any other special VA programs that we might go out there and with. The biggest thing is that COE, because I've seen people say, oh yeah, they're a veteran, here's their DD 214, they get pre-approved, they go under contract and they never got the certificate of eligibility done. And then I've had people call me and saying, hey, you're a veteran, can you help out? Is there anything that you can do? Because my lender is not doing it. If that COE comes back, or we need paperwork, like I said, from National Guard, anybody else from the 80s, 90s, way back in the day, trying to hunt down old paperwork, that can be a process, especially if it has to go up to the Defense Department's financing system. That is probably the slowest government entity in the world. If something that we put in there could take 2-3 weeks for something that should take 2 seconds. They are just super slow. So if it ever goes into that system, it's going to take a while. So we want to make sure we get the COE before we're issuing any kind of pre-approval out there. So any lender you're talking to, make sure they have that, because that is a huge issue with it. Seller's concession. Seller's able to pay for anything that's just kind of customary on there. So they can charge over any of the title things that they want. You can add it into the contract. The biggest thing is it's capped out at 4% of seller's concessions back to them. So it's not going to include what is going on with what they say they're going to pay for title. So sometimes you can kind of tap into over 4% because you're going to have them pay for other items in the title work that normally the buyer might pay, that you can have the seller pay. Again, it can be used for their funding fee if we wanted to, their prepaid expenses, anything like that, and they can actually use that money to pay off any of their liabilities, judgments, collections. All that can be used with the seller's concessions. So under contract, the inspection and appraisal. Inspection, get that WOD. That is the biggest thing. I've seen it where 2 or 3 days before loan approval, we're like, hey, where is this WOD? And they're like, oh, we never did it, because nobody thought about, hey, the VA side of doing it. I always iterate it to the veteran that make sure you get this WOD. And then if there is a well, we need the well inspection also. That's another big thing. The well and the septic tank have to be so far from each other. I've never ran into that issue at all, but that's just something to also think about. Appraisal, biggest thing on the appraisal. A lot of people, when I talk to seller agents, is they're worried about the appraisal. I think they're more worried about the safety issues that come up on an appraisal, because I always say the numbers are the numbers. Most of the appraisals that we have in our pool are VA certified. So it's just a certification. It's not just VA people. So if the purchase price and the comps and all that add up, it's going to be fine. Now, safety issues will come up on that appraisal if they are there. The other thing is there is no rushing the appraisers. We cannot put in a rush order. It is 10 business days from the day that it is ordered that it has to be back. So you can't go in there and say, hey, I want a loan approval for 7 days on a VA with a VA loan. I mean, we could get everything done, but how the contract is written, at least in Florida, you're going to have that. You need to put in a separate appraisal contingency, because if you don't, then we'll have their side done. We just won't have the appraisal back. Now, it could be back. Doesn't mean it's going to be to the 10th day, but they can take up to that 10th day. And then they have what's called tidewater. If it's going to come in low, the appraisal will call us and say that they have a tidewater situation, and then they won't tell us where they're at on the price, but they will give us the opportunity to go back to the agents and say, this is a situation, we're coming in, the appraiser's coming in low. Do you have any comps or anything else that you want to send over to help them out that they might not be seeing? Now, they do not have to tell us what they're already looking at, but maybe there's something that recently closed that we can push over, or any of the comps that, push it onto the seller's agent of, this is why they're at this price, and here is the comps for it. Loan approval. A VA loan is similar to any other loan that's out there. All the deadlines for the VA is like with any other loan, so it's not any harder to do. Like I said, it's just upfront work at the beginning to ensure the certificate of eligibility is there. That is the first big hurdle to cross, and it might be a 2-second one, it might be a couple week one, but then everything else is just like any other loan that's out there. Besides the safety issues on the appraisal, which I mean, that comes up on FHA too. As we were saying before, they must be there within 60 days. If they're singled and they're on active duty, they have 12 months to actually be there. And if they're deployed, the spouse will count as the occupant for them. So marketing to VA buyers. Some of you guys are already Homes for Heroes. We have the hometown hero loans that are out there. That is a huge one because basically the first time home buyer scenario does not apply to them anymore with that. So they basically can get in that home for paying for an inspection, and that is it, because the hometown heroes is going to take care of the rest of it. Sending out videos explaining the VA loan to people. I'm actually starting to do home buyer classes on Zoom, targeting veterans in certain areas, and then we'll be, once these people are qualified, passing it out to you guys. Any veteran service offices you see out there, it's a good place to kind of target and put out there. But you guys know that I'm very big on videos, so I always think videos is the best way to put it out there because it's just a misunderstood loan. Again, less than 33% of people actually use that VA benefit, and it's kind of crazy.
Can I cook for them?
What's that?
Can I cook for them?
You can. I'm still waiting for you to cook for me.
Yeah, right. Okay.
But again, it's just an underutilized loan, and I don't think it's that the veterans don't know about it, especially if they're post 9/11 veteran. It's been distilled in us a lot to use this, but I think that we have sometimes a hard time with sellers wanting to accept it. So them not understanding the VA loan and the process, just because they see that it's a zero down payment, that they have no skin in the game, that's what they're kind of worried about. Any questions?
No, that was pretty good.
Perfect.
Yeah, not perfect, pretty good.
Oh, okay.
Yeah.
I actually do have one question. What does NOV stand for again?
Oh my gosh, it's
Is that the Tidewater? It was in
yeah,
between.
the notice evaluation, that's the Tidewater.
Oh, okay, thank
Yeah.
you.
That they're coming in low. Usually it's when they're coming in about 10% low, then they'll come in and say it. I've had it happen twice. It gives the benefit of either they can back out of it so they don't have to pay for it. Because what they'll do is they'll just look at it like a desktop appraisal, and then gives a benefit for the seller's agent to provide any documentations to prove where it's supposed to be at. Yeah, you're not seeing it as much. You know, when we were having the overbidding, you were seeing it, but most of the time we knew that going in, like, hey, they're paying 10, 15% or 15,000 over. They already knew it, so they were okay with it, kind of thing.
So on the sell side, Stephen, what's the advantage to the seller to accept a VA loan? As you say, there's this misconception that they don't have any down payment, so they don't have any skin in the game. They could walk away or whatever.
I mean, they're going to still put down escrow. I mean, you still need to put escrow down. That's your skin in the game. You're just going to realize that the veteran is either going to get it all back, or that's going to go towards just the closing cost of it. The biggest things that I see is people are worried about appraisal. I'm like, the comps are the comps. I mean, that's what the appraiser is looking at, and then they're worried about that they're going to have issues during inspection. And I'm like, basically, they're making sure that it's safety issues. So
Right.
as Kelly was saying, like, she already knew what was going on with the house, that she knew there was wood rot and the window was broken. Like, these things are there. You're most likely not going to put that, hey, I'm going to accept a VA offer, or you need to say up front, like, these are the issues. The seller is not willing to pay for it. So if the buyer wants to come in when these issues come up, if they want to pay for it, they can. It used to be until 21, when the Blue Green Water Act came in for veterans, that they took away that it used to be the veterans could not pay for any repairs. Now they can. So it's kind of that not known thing that veterans actually can go in there and be like, hey, I know that window is broken. I'm just going to, before we close, I'll pay for it to have done. I have seen where sellers will pay for it and then the upfront, and then we'll pay for it upfront, and then the buyer will credit it at closing back to them.
Steve, hi, it's Monica. I have a quick question.
Yeah.
I came in late, so you probably answered it already. I just learned about an FHA loan where if once they purchase the property and the owner used an FHA loan, they have to wait a certain time. Like, I think it was 90 days to put it back on the market for sale. If somebody uses a VA loan to purchase, do they have to wait a certain period to put it back on the market?
I haven't heard of an FHA. No, they don't have to wait. I think you're meaning there's a 90-day wait period between purchases on an FHA loan. Which meaning like I buy a house and I fix it and flip it. That's usually where you're seeing the case. FHA
Right.
says they can't purchase, whoever's coming in to purchase that house.
Mm-hmm.
So I could have paid cash for it, fixed it and flipped it. Whoever's coming in to purchase that house can't do anything until the 91st day. So that means they can't go under contract into that 91st day.
If they're using an FHA loan.
They're using the FHA loan. Yeah, it's a fix or flip rule.
Okay, and so VA doesn't apply to that.
Mhm.
Okay, thank you.
Now, I have a random thing. I'll put this out here. I may or may not have experienced this. What's the proper way to handle a situation where they list that they don't accept a VA loan? They won't accept VA loans, but the house is fully renovated. There's nothing that would actually hold it up. And then when you ask the listing agent why they wouldn't accept a VA loan, they say, oh, well, I told my client not to accept VA loans because the appraisals come in low. What would you do in that situation?
The comps are
If you were the guy that helped me with that.
Yeah, the comps are the comps. I always tell them, it depends on the
Is it
lender
an ethics
too.
violation for them to say that?
No.
Oh, that's the reason why we don't want
Yeah,
to.
I don't know if it's an ethics violation not to tell them. But I always say the lender and their appraisal pool and who they have now, like if they use an appraisal management company, and now that management company is just trying to hire the most cheapest appraiser to go out there. So it doesn't matter what type of loan they have, VA or not, it's going to be a crappier appraisal. But if they have their own pool appraiser, so whatever the person pays for the appraisal actually goes to the appraiser and there's no middleman fee taken out, it's going to be a quality appraiser. So as long as the numbers that they came up with as the seller and the homeowner came up with can be proven, there's no issue.
Right. I was more referring to the fact that the realtor said to their client,
Yeah.
we're
Usually
not going to even
slow.
put out there to accept this,
Yeah.
even though there's nothing preventing the house from being accepted. They
It's
just
usually just
educating
educating them that, hey, it's the comps. Like if you have the comps proof, it's just the VA appraiser is a VA certification. Like they just have a certification that they can do it. They're a regular appraiser. It's not like they only do VA loans. They're still a regular appraiser. So it's just giving them the knowledge that as long as the comps match, then they're going to be fine with it. They don't have anything to worry about.
That's when you just tell that agent to call Steven and let him explain it.
Yeah, that's what we did.
He just bought the house across the street instead. It's fine.
We'll buy that one.
But it's a shame. It's, sad for that customer that they probably lost out on what could have maybe been a better house or what,
Yeah.
so.
Is what it is. Too late now.
All right, any other questions?
Asking about 2 years.
No, this was great. Thank you.
You're welcome.
Actually, Lisa has a question.
Steven, if they
Yeah.
had a VA loan with a foreclosure, is it from the date that they file, it's 2 years? Or if they get themselves out of it, does it clear off or no?
Yeah, if it was paid off in the sale of their house before it actually was foreclosed upon, but they still filed the initial paperwork.
We just
What-
got to prove it. It's the date that it was, what's the word I'm looking for?
Closed?
Basically closed, yeah.
Funded?
The date that they didn't have a date that the court accepted it because they just paid it off.
They paid it off prior to,
Yeah.
So-
even though it's there,
We're gonna have to
Like
prove,
now?
we just have to prove that.
okay.
Okay. So that was,
That was my question.
Yeah,
Thank you.
they were technically not foreclosed on. They
Yes.
probably started the
Correct.
process and then.
Okay.
okay, perfect.
Yeah.
All right, I think that's all we got. Thank you, Stephen, for an awesome presentation.
Thank you.
Thank you.
Steve, thanks very much.
Thank you, guys.
Steve,
Bye, have a
Tomat.
great day, everyone.
Bye, guys. Have a good one.
Bye.
Bye.
See you
Steve,
Thursday.
Woo!
Steve.